Welcome to the Deep Dive. Today, we've got a stack of sources centered around excerpts from something titled The One Big Beautiful Bill Act.
Ah,
And just from the name and the sheer volume of text, it feels like it reaches into almost every corner of policy.
that's certainly the impression the excerpts give, yeah. It's a legislative document that touches on an incredibly wide range of areas. We're talking defense spending, border policy, education finance, healthcare, tax law, even natural resource management. It's really broad.
Our mission, as always on the Deep Dive, is to try and cut through that complexity for you. Pull out the most important insights from these sources and help you get informed without feeling, buried under all the details.
Exactly. We're looking for the significant changes tucked away in these pages, particularly focusing on how they could impact different aspects of life.
And we'll also zoom in on areas specifically requested by the listener who sent these sources in, like changes affecting transgender people as detailed within the provided text.
Right. We'll definitely cover what the text says there.
All right, let's open up this massive bill excerpt and see what key nuggets we can uncover for you. Okay, let's start with some of the heavy hitter areas right at the top of the sources: defense and border security. Title II covers the Department of Defense. We see sections here focused on military readiness, support missions at the border, intelligence activities, and major construction projects. Seems pretty standard defense stuff at first glance.
Right. But what stands out are the specific financial commitments mentioned. We're talking significant appropriations here, hundreds of millions earmarked for things like new armaments cooperation programs, substantial investments in Navy interceptors,
Sorry.
and expanding missile defense capacity. The bill also requires the Secretary of Defense to lay out exactly how they plan to spend this money pretty quickly after the bill passes.
So quickly.
Within 45 days of enactment, according to the text.
Okay, 45 days. That's a quick turnaround. So a clear financial boost and a directive for rapid planning and defense. Now, flipping over to Homeland Security and Judiciary, Titles 6 and 7, there's a really big focus on the border here.
Absolutely. The text details significant funding allocated explicitly for building border barrier systems.
Physical barriers.
Right. And hiring and equipping more customs and border protection personnel, improving facilities, the whole infrastructure piece. What's kind of fascinating here is how Title VII gets into the mechanics of the immigration court system.
How so? What changes there?
Well, it outlines new fees for things like requesting a continuance, a delay in a case, or filing an appeal.
So potentially making those processes more costly for individuals.
It could, yeah. It also allocates funds for increasing detention capacity for adults and hiring more immigration and customs enforcement personnel. But perhaps one of the most specific details we found is in the section discussing parole for individuals who are not citizens.
Parole. How does it define that?
It's very narrowly defined in this text. Primarily permissible only if the individual is assisting the U.S. government in law enforcement matters.
Wow, okay. That's a very specific condition.
It is.
So the early parts of these sources paint a picture of increased investment and tighter procedures in defense, border infrastructure, and the immigration processing system. Okay, let's shift gears completely and look at Title III, which covers education and workforce. This section seems to make some key adjustments to how students might pay for college and what kind of aid is available.
Yeah, this raises an important question, right? How does this bill change the landscape for student loans and financial aid? The sources detail new aggregate limits on federal direct unsubsidized Stafford loans.
Aggregate limits, so like a lifetime cap.
Exactly. For undergraduate programs, there's a cap set at $50,000 starting in July 2026, with different limits outlined for graduate and professional students.
Okay, $50 for undergrads. And once you have the loan, how does repayment change? That's always a big one.
This is a really significant shift. Also, starting July 1st, 2026, the bill mandates that most borrowers taking out new loans, they'll be required to use the standard repayment plan.
Required.
Yeah.
So, wait, does that mean no more access to certain income-based or income-contingent options for those folks?
Well, for those specific new loans, yes. It appears to eliminate access to some of those plans that have been common, although it does introduce a new plan called the Repayment Assistance Plan. We don't have all the details on that from these excerpts, but it's mentioned.
That sounds like a pretty major change for future borrowers, locking them into a standard plan potentially. There's also mention here of something called Workforce Pell Grants. What's that about?
Right. This introduces a new category of Pell Grant. Traditional Pell Grants support, broader college enrollment. These workforce Pell Grants, however, are specifically tied to eligible job training programs. Short-term programs, skills-focused.
Okay, more targeted.
Exactly. But what's really interesting, and maybe a bit controversial, is this concept of value-added earnings linked to these programs.
Value-added earnings. Tell me more about that. How does that work?
The bill basically connects an institution's potential reimbursement for these grants to how much students who complete the program earn compared to the program's price.
So the school's funding depends on graduate salaries.
In a way, yes. It even specifies that if graduates' earnings, this sort of value-added part, significantly exceed the total cost of the program, the institution might actually receive 0% reimbursement from this particular fund.
Wow. So it really ties the funding directly to perceived job market outcomes.
It seems to strongly link it, yes. It's an approach trying to measure the direct financial return on investment for these specific training programs.
Okay, moving into healthcare under Title IV, specifically Subtitle D, we see several modifications impacting programs like Medicaid and CHIP.
Yes, there are a number of administrative and eligibility tweaks in here. For instance, the bill puts a long-term pause, we're talking until 2035, on implementing a particular eligibility rule for one of the Medicare savings programs.
Okay, long delay on that rule. What else?
It also seems to tighten eligibility verification processes, requiring more frequent checks, redeterminations for some individuals, and it explicitly prohibits using federal funds for individuals whose citizenship or nationality can't be verified according to the rules laid out.
Right. And this is also the section, I believe, where we find details directly related to the listener's specific request about changes affecting transgender people. Section 44125.
This is indeed where the source material gets very specific on that topic.
Yes.
This section of the bill prohibits the use of federal financial participation that's essentially the federal matching funds states get.
Okay.
Under Medicaid and CHP for what it terms specified gender transition procedures for individuals under the age of 18. It defines minor that way.
Under 18. And what procedures does the bill specifically list under that definition, calls them specified procedures?
It provides a very detailed list in the text we have. It includes various types of surgeries, castration, sterilization, hysterectomy, procedures listed as breast reduction or removal, which sounds like mastectomy, augmentation mammoplasty, and facial surgeries.
So surgical procedures.
Yes, and it also includes the administration of puberty-blocking drugs, things like GnRH analogs, and cross-sex hormones like testosterone or estrogen when they're given at doses that exceed the normal endogenous levels for an individual of that age and biological sex, as the bill defines sex.
Okay, that brings up a key point. How does the bill define sex for the purposes of this specific restriction?
The text is quite explicit here, which is significant. For this particular section, it defines sex as, and I'm quoting loosely here, either male or female as biologically determined. It then goes on to define female based on having the potential for the reproductive system that produces, transports, or utilizes eggs. And male, similarly, based on sperm production and transport. It does make an allowance for developmental or genetic anomalies or what it calls historical accident.
So a very specific biological definition tied to reproductive systems is used in this section.
Yes, that definition is key to how this restriction on funding is applied within this part of the bill.
Are there any exceptions outlined in the bill for this prohibition on funding these procedures for minors?
Yes, there is an exception stated. The text says that this prohibition does not apply to services that are deemed medically necessary to treat a genetic or developmental anomaly, a disease other than gender dysphoria, or an injury.
Okay, so it carves out specific medical reasons like genetic conditions or injuries where these procedures would still potentially be eligible for federal funding, but explicitly excludes gender dysphoria from that exception.
That's how the text reads, yes. It's a very precise set of provisions, directly from the sources and hitting on that listener's question.
It truly is. Very specific language there.
Staying in the health realm, but moving to a different topic within it, the bill also introduces new community engagement requirements for certain Medicaid recipients.
Community engagement, what does that mean in this context? Work requirements.
It generally means requirements for adults receiving Medicaid to participate in activities like work, education, job training, community service, that sort of thing.
Okay. Does it apply to everyone on Medicaid?
No, generally applicable to adults, but the bill includes a lengthy list of specific exclusions. Individuals who are pregnant, medically frail, certified as disabled, or meet certain criteria related to being, for example, American Indian or Alaskan Native, among others, are typically excluded from these requirements.
Lots of exceptions.
Yes, quite a few listed. The text details what counts as engagement and outlines compliance procedures, including potential loss of eligibility if requirements aren't met, and no exception applies.
And what's this about waivers?
Ah, right. What's notable is a provision specifying that states cannot use certain waivers, like those under Section 1115 demonstrations, which states sometimes use to customize their Medicaid programs. They can't use those waivers to get around these specific community engagement requirements mandated in the bill.
Interesting. So, a potentially significant shift in eligibility rules and introducing work-like requirements for some without the usual state flexibility via waivers. I also saw changes affecting the Affordable Care Act insurance markets, still in this health section.
Yes, this same subtitle includes revisions there too. For example, the rules around how much health plans' actuarial value can vary, those are changed. And there are limitations placed on who can enroll in certain silver-level plans on the marketplaces.
Okay.
There's also a requirement for health insurance companies to apply a new enrollee's first premium payment towards any past debt that individual might owe to that specific insurer.
Well, that could definitely impact someone trying to re-enroll if they had prior debt.
It potentially could, yeah. And just a smaller but interesting detail tucked in elsewhere. The bill makes it explicitly permissible to use health savings accounts, HSAs, and similar funds for qualified sports and fitness expenses.
Like gym memberships.
The text mentions qualified sports and fitness expenses, so presumably things like that, yes.
Okay, let's take a look now at some of the sections dealing with tax and finance. Title V touches briefly on financial regulators.
Briefly, yes. These sections mainly cover administrative points for bodies like the Public Company Accounting Oversight Board, the PCAOB, and the Bureau of Consumer Financial Protection, the CFPB. It focuses on things like sharing information between agencies and coordinating enforcement actions, not a major policy overhaul in these excerpts, more procedural tweaks.
Got it. So Title A7 seems to be where the bulk of the tax changes live under Ways and Means.
Correct. This title appears quite extensive based on the excerpts. A key takeaway here is the extension of many provisions from the 2017 Tax Cuts and Jobs Act.
So making some of those changes more permanent.
It appears so. This includes keeping the current individual income tax rates in place beyond their scheduled expiration date, and also changes to the standard deduction.
Okay, extending individual tax cuts. What about businesses? Anything major there?
Yes, there are significant business-focused changes mentioned. The bill extends bonus depreciation.
Remind us what that is.
It allows businesses to immediately write off a large percentage of the cost of qualifying assets, like equipment, instead of depreciating it over time. It's meant to encourage investment. It also reinstates the ability for companies to immediately expense their domestic research and experimental expenditures, basically getting an immediate tax break for R&D costs.
That sounds like a big deal for R&D heavy industries.
It is, but importantly, this reinstatement for R&D expensing is specified as temporary in the text. It's currently set to end after December 31st, 2028.
Okay, so a temporary boost for R&D expensing. Are there any entirely new types of accounts or tax credits introduced in Title 11?
Yes, this title creates something the bill text calls MAGA accounts, Make America Great Again accounts.
MAGA accounts, what are those? Like retirement accounts?
They appear structured somewhat similarly to, say, an IRA with a specified contribution limit of $5,000 mentioned in the text. The excerpts detail how distributions from these accounts would be taxed, generally treated as net capital gain rather than ordinary income.
Interesting. What about credits?
It also introduces a new tax credit for contributions made to scholarship granting organizations, or SGOs.
SGOs, scholarship granting organizations. What's the purpose of these credits? School choice related.
It seems so. Contributions to these SGOs, which qualify the donor for the tax credit, can then be used by the SGO to fund qualified K-12 education expenses. And the bill significantly broadens the definition of what counts as a qualified K-12 education expense for this purpose. Think tuition, fees, tutoring, materials, maybe even homeschooling costs.
So potentially a big expansion of tax-advantaged funding for K-12 options outside traditional public schools.
That appears to be the mechanism, yes. There are specific rules outlined for how these SGOs must operate, distribution requirements, and there's a state-based volume cap on the total amount of these credits available each year.
Okay, that's quite a bit on the tax front. Now, I noticed something quite different back in Title IX about federal employee pensions.
Yes, that's another area with significant changes outlined, specifically impacting new federal employees hired under the FERS retirement system.
What kind of changes?
The bill increases the contribution amount these employees will be required to pay from their own salary towards their pension. So, a higher deduction from their paychecks. It also eliminates the FERS annuity supplement for certain employees who retire starting on or after January 1st, 2027. That supplement was sort of a bridge payment until Social Security kicks in for some retirees.
Okay. Higher contributions, supplement eliminated. What else?
And perhaps most notably, it changes how the pension amount itself is calculated for these new hires. Instead of basing it on the average of their highest 3 years of pay, which is known as High 3 and is the current standard,
Right.
it will now be based on the average of their highest 5 years of pay, or High 5.
What does that High 3 to High 5 change mean in practical terms for a future retiree's pension check?
For most federal employees, switching from calculating the pension based on the average of their highest 3 years of salary to their highest 5 years will likely result in a slightly lower overall pension payout, because that average salary figure will be smoothed out over a longer period, typically including some lower earning years.
So potentially a less generous pension calculation for new hires.
That's the likely outcome, yes. The bill even includes a provision offering some individuals appointed after enactment the choice to elect at-will employment status, which comes with lower FERS contributions but also different job security implications. It's presented as an alternative option.
Okay, almost there. Finally, let's look quickly at Titles 8 and X. These seem to deal with natural resources, energy, and transportation.
Right. Title 8 dives into natural resources policy. A key point here is the mandate for oil and gas lease sales on federal lands in specific states. The text requires at least 50% of nominated parcels in areas like Alaska, Montana, Nevada, Utah, and others to be offered for lease.
So forcing lease sales in those states.
That's what the language mandates, yes. It also attempts to streamline things by setting specific timelines and limitations on when legal challenges or judicial review can happen for certain energy projects.
Potentially speeding up project approvals by limiting court battles. Is that the idea?
That seems to be the intent described in the text, setting statutory deadlines for lawsuits. This title also creates a new fee structure for renewable energy projects, specifically wind and solar located on federal lands.
Okay. Fees for renewables on public land. How does that work?
It details things like acreage rent and capacity fees based on the project size, and it even specifies exactly how the revenue generated from these fees will be distributed.
How's it split?
According to the text, 25% goes to the state where the project is located, 25% goes to the relevant counties within that state, and the remaining 50% goes into the general federal fund, the Treasury.
Interesting. Creates a clear financial incentive structure for states and counties to host those projects on federal land within their borders.
It certainly does. And then in transportation, Title X, I think you saw something about a new fee as well.
Yes, a new fee on cars.
That's right. Title X introduces a new federal registration fee on motor vehicles. It's designed to be administered by state motor vehicle departments, like the DMV. They would collect the fee, presumably during regular vehicle registration, and then send the funds to the Federal Highway Administration.
Okay, collected by states, but it's a federal fee. How is the fee calculated? Is it a flat fee?
No, the bill specifies that the fee amount will be based on the value of the vehicle. There are different percentage rates applied depending on different value tiers, price brackets that are outlined in the text. So more expensive cars pay a higher fee.
A value-based registration fee.
Exactly. And the text also includes provisions for grants provided to states specifically to help them cover the costs and logistics of setting up and running this new collection process.
Wow. Okay, that was quite the journey through just excerpts from this one big, beautiful Bill Act. Really lived up to the big part of the name. We've covered everything from significant defense appropriations and stricter border procedures to changes in how students pay for college, major shifts in healthcare eligibility and access.
Right, including that very specific provision about federal funding for gender transition procedures for minors.
Yes, that was very detailed. Plus, a new tax advantage savings account, those MEGI accounts, adjustments to federal employee retirement, mandated energy leases, and even that new value-based fee on motor vehicle registration. It's a lot.
It really underscores how a single piece of legislation can weave together such a vast array of detailed policy changes that touch so many different parts of life for you, the listener. We tried to pull out specific nuggets, like the precise list of procedures and the definition of sex in that healthcare section we discussed, addressing the listener's query directly from the text. Or the concept of linking workforce Pell Grant funding to graduate earnings, the mechanics of the high 3 to high 5ers change, and the structure of that new motor vehicle fee based on value.
It's a massive amount of information, but understanding these specific details rather than just, broad summaries is really key to grasping the potential real-world implications of a bill like this.
Absolutely. Seeing the granular level of detail on things like community engagement requirements or exactly how revenue from renewable energy fees is distributed shows just how deeply these kinds of legislative changes can operate and affect different groups and sectors.
So stepping back from the details, what does all this mean? Putting so much into one bill.
Well, this raises an important question, doesn't it? When a single legislative vehicle attempts to make such wide-ranging and incredibly detailed changes across everything, defense, healthcare, education, personal finance, energy, taxes, land use, how does that concentration of policymaking shape the legislative process itself? And maybe more importantly for you listening, how does it impact the public's ability to fully track, understand, and react to all the potential effects of a law like this before it's actually enacted? It's certainly something to consider as you process all the different elements we've explored in these sources today.
A lot to think about indeed, that concentration of power and policy in one place. Well, that's it for this deep dive. We hope you found some valuable insights buried in these complex sources.